So it's often an afterthought. You've achieved your approvals to split your block, or to build that industrial shed, or to build those houses, or to start your townhouses, whatever the case. You and your builder have negotiated and finalised a contract which seems fair. And then you go to your lender to obtain funding, only to find that the contract isn't acceptable. Yes, that's right. Most lenders will make it a condition that you adhere to changing your contract if requested. So guys, stay tuned because I'm going to go over the types of commercial contracts that lenders like to see and what clauses they like included in your contract. Hey guys, Doug Cotton here, your property finance specialist, where I talk all things finance for property investors and developers. So if you're applying for a commercial loan to assist funding a development, most of the time your lender will want for your building contract to be what's called at market acceptable parameters. So they'll often start out by instructing a quantity surveyor to review your building contract to ensure it's on acceptable terms and that it's the right type of contract for the project you're undertaking. Now, the beginner developer will often start grinding their teeth with house renovations, house builds, splitter blocks, things of more simple nature. So this won't really apply to them. And chances are you'll be on a domestic building contract with your builder. So the majority of commercial building contracts I see are for fixed price contracts, either for design and construct work, that is where the builder does the planning work, or just construction. They usually include HIA standard contracts or the Australian Standards AS 4902-2000 contract, or the builder might have their own pro forma contract put together by their solicitor. So whatever the type, they should all include your widely accepted salient clauses that are standard across all contract types. So your lender will firstly want there to be a commercial building contract if they define what you're undertaking to be a commercial development project. Then that the salient clauses are generally in line with what's being negotiated in the market and what's seen as fair and equitable. So guys, I'm going to go each of what those salient clauses are and what is generally acceptable in today's. So really simply to start with, should include the principal name, which is a given, and the contractor's name, whether there is a superintendent involved. So if this would apply if you've chosen to employ either an arm's length project manager, or you might have even asked your builder to act as project manager if they're the head contractor. It does help to employ someone to help you with your project if you lack the experience with the particular type of project that you're undertaking. It also helps with achieving finance. Period of time for practical completion. So the lender, through the quantity surveyor, will assess whether the contractor has allowed sufficient time given the type of project. So if, for example, you're developing multiple lots as part of a lot subdivision project, then chances are you wouldn't need 18 months to 2 years for your civil contractor to come and do that work. It should only really be 6 months at the most. Governing laws, so whether the contract applies to the laws in Queensland, New South Wales or another state. What form of contractor security there is. So this is often a point of contention brought up by sometimes builders and sometimes developers, but I can assure you it's very common in today's market. So essentially the contractor security protects the developer in the case where there is any, for example, defects or disputes on site. They have recourse to a deposit, or recourse to a bank guarantee, or recourse to any retentions or funds withheld from each of the progress claims that the builder has made. Your lender, again through the quantity surveyor, will want to see that there is some form of contractor security, and the amount is typically equivalent to 5% of the contract value, be it either a bank guarantee provided by the builder, if they prefer to receive all of the proceeds from for each invoice, or they have a certain amount retained from each invoice, which is typically, again, 5%. Any additional security for unfixed plant and material. So this often applies to things like lifts that have been installed into an apartment building. Given the significant cost associated with buying lifts, the developer will often want for these to be paid up front, and thus security needs to be provided in addition to the normal security provided by way of bank guarantee or retention. The amount of the contractor's security is reduced by once practical completion has been achieved. So again, this applies to the defects liability period, which I'll go into more detail shortly. If there's any security offered by the developer, so very often, or I've never actually seen any form of security offered by the developer, so I'm not going to comment here. What insurances are to be included and who is to arrange these, such as contract works insurance, public liability insurance, and so forth. These particular ones are often arranged by the builder. The amount of liquidated damages, and as I mentioned before, whether there's a defect liability period and how long that period is for. When practical completion has been achieved, usually the developer or the lender will return half of the contractor's security, with the other half to be returned after the defects liability period if there's no defects to have been found. How often progress claims are to be made by the builder? So most contracts I see include a 30-day term here. If you're a developer, I'd recommend the maximum time, so that's normally 30 days, because there's a bit of a process involved when it comes time for your lender to pay a progress claim. They've got to get a quantity surveyor out there to inspect the site, and then for them to prepare a progress report to be assessed by the lender, and then they'll pay what's been certified by the QS in their report. Now, whether the builder can claim for any unfixed material, what the interest rate is on any overdue payments for progress claims made by the builder, and time that the developer has to remedy these payments. So guys, if you're not sure whether your contract will be accepted by a QS and consequently by your lender, then I recommend you talk with a quantity surveyor, or if your broker is specialised in property development finance, then I'd talk to your broker.